Minutes ago, the closing bell just rang on Wall Street, and it was quite the day for stocks after the unprecedented move by federal regulators to quash panic following the collapse of Silicon Valley Bank in California.
Federal officials promising all depositors would keep their money would stay in place, and that attempted to bring some calm. You're looking at the numbers right now. The Dow did close down 90 points today, so that is one thing to consider, but the two other indices as well. Joe Fisher keeping an eye on those. Both of those ended in the green today, Joe.
Dan and Lena, these are really drastic measures being taken by the federal government to really assure traders and really everyone some confidence in the banking system. Let's take a look at how the stock market closed. The Dow down 90 points, the S&P down about 6 points, NASDAQ finishing in the green. But it's important to know that despite all of the volatility today, that these stocks, all three indices, did spend quite a bit of time in the green, which was much different than what people were thinking when they woke up this morning. Today, we heard from President Joe Biden. He took to the podium at the White House today to talk about exactly what the federal government is doing to restore confidence in the banking system. Karen Caifa reports from Washington.
President Joe Biden trying to instill confidence in the American banking system after Silicon Valley Bank collapsed and Signature Bank was shut down by regulators, both within days of each other.
Americans can have confidence that the banking system is safe.
Biden said customers of the failed banks would have access to their money Monday. The funds coming from the Federal Deposit Insurance Fund, which banks pay into, and not from taxpayers. Biden also said investors took a knowing risk in the failed banks and would not be protected, and the bank's leaders fired. Silicon Valley Bank was little known to most Americans outside of the startup world before depositors hastily withdrew $42 billion last Thursday in a classic bank run amid anxiety about SVB's financial health. The Biden administration's plan was relief to customers like Stefan Kalb.
It's odd to think about it now, but just even a week ago, Silicon Valley Bank was the gold standard. We are expecting Silicon Valley Bank to be around.
On Sunday, New York state regulators seized Signature Bank, a big lender to the cryptocurrency industry. Fears of other regional banks on the brink are raising eyebrows about how they're regulated, with less stringent rules than those put in place for the major financial institutions after the 2008 financial crisis.
The problem is, because of those regulations, a lot of the business they were doing has migrated to the less regulated parts of the financial sector, which are now pretty big.
Meanwhile, the Securities and Exchange Commission said Monday it's on high alert for any misconduct amid the recent banking turmoil. In Washington, I'm Karen Caifa.
And it's still unclear right now if this financial shock will lead to the Federal Reserve pausing the interest rate hikes that have continued. At this point, Lena, it does appear that traders think that that interest rate will continue by about 0.25%, a quarter of a percent. The Federal Reserve will meet next week to decide if that will happen. Coming up at 4:30, Matt Tallhelm is talking with local businesses who use these banks. You'll hear from them about what they are saying about all of this volatility.
Yeah, you're seeing stocks there closing pretty flat. Has to be a win for federal regulators. Joe Fisher reporting live for us in the Live Center. Thank you.